I spoke with Luci Ellis, the Chief Economist of Westpac, a little earlier.
I think there's an underlying trend in Australia and around the world to expect more of government. And to be honest, I've just come back from 3 weeks talking to our customers in Europe and North America. And when I show them the graph of the fiscal position in Australia versus the fiscal position in the US and some other countries, everyone's reaction is, you guys don't have a problem. There is an issue in terms of the tax burden that those expectations require. But in terms of fiscal sustainability, Australia is in a pretty good place.
Yeah, I guess the spending has obviously kept our economy growing. It's created jobs. It's resulted in, the construction of things like roads and critical infrastructure. So it's had a lot of benefits. But whoever wins this upcoming election, will they be able to sustain that spending without raising taxes?
Fundamentally, in Australia, because our tax brackets are fixed in dollar terms, unless there's an explicit tax cut given, taxes do rise as a share of income. That's something we've been calling out for some time. And it's part of the reason why there was such a squeeze on household incomes over the last few years. And you don't see that in countries like the United States or Canada, where the tax brackets are CPI indexed, which I should point out is not something I would advocate.
Yeah, I know Peter Dutton has said he has aspirations to fix bracket creep, but there's no concrete policy from either the Coalition or from Labor around changing the tax brackets. Is that something you think needs to be addressed immediately?
I have previously advocated for escalating the tax brackets by 2.5% every year, 2.5% being the midpoint of the RBA's inflation target. And the reason you do it that way, rather than escalating by the full CPI, is that you still end up having fiscal policy lean against periods of high inflation, such as the one we've just come out of. And if you don't do that, if you don't have fiscal policy leaning against high inflation, then monetary policy's got to do all the work. And, that has a much more uneven impact on people. So, there are questions around how we should raise the revenue that governments need to provide the services that people expect, but it's part of a holistic design program.
All right, looking ahead to whoever wins this election, what sort of economy are they going to be inheriting? I note this week the IMF downgraded all of its global economic forecasts, including for Australia.
Well, Ed, we've downgraded our forecast for Australian growth in 2025 as well, albeit only by 0.3 of a percentage point, from 2.2 to 1.9%. That is still positive growth, but it is a bit soggy and it is a bit disappointing. The Australian consumer, as I mentioned before, has been squeezed by high inflation, rising taxation, and to a lesser extent, high interest rates. Lower interest rates is helping, lower inflation is helping, and the stage 3 tax cuts is helping, but we're still seeing quite weak consumption. And, we also did see a little bit of a hit to consumer confidence after the tariffs were initially announced by the Trump administration. We saw that in our Westpac Melbourne Institute consumer survey. Now, it's nothing like what's happened in the US, where consumer confidence has absolutely tanked because people are realising that they're going to be paying much higher prices because of these tariffs. This is much more of a hit to the US economy than the rest of the world, but I think all of us are facing much higher uncertainty. Every day there's a new headline coming out of the Trump administration. Are these tariffs going to stay where they are? Are they going to be cut? Is there a negotiation going on? Is there not? Is the Federal Reserve going to remain independent, or is the Trump administration going to be able to pressure it? These are all questions that are being debated both by our customers offshore and here in Australia, and they're weighing on people's confidence, and they're causing people to delay some of their investment decisions. And this is not a great outcome for the world economy.
Yeah, there is an escalating chance that the US economy falls into recession. But what about our biggest trading partner here, China, as well? They're obviously in the middle of a tit-for-tat trade war with the US. If they slow down, I think the IMF said their economic growth this year has gone from 4.6% down to 4%. If their economy deteriorates, what does it mean for us?
Well, different people have different views on the outlook for China. Our view is that the Chinese authorities will do what they need to do to still hit their 5% growth target. That's their objective. They have a lot of tools to do that. And I think the fact that the Chinese authorities haven't offered any concessions and have escalated tariffs in a tit-for-tat way with the United States tells you that the Chinese authorities think they can outlast the US on this. The US tariffs are an act of economic self-harm for the United States. And I think the Chinese think that they can outlast them.
All right, next week we get the critical quarterly CPI figures for our economy on the 30th of April. What are you expecting to see, and how's the Reserve Bank going to react to these numbers?
Well, earlier this week, I already put out my rate call. I don't think we need to wait for the CPI next week. I think we can lock in a 25 basis point reduction in interest rates on the 20th of May. I think the world has changed enough that you can lock that in. Previously, we've been in the wait for the CPI. Is it enough for the RBA to move? Has the RBA been surprised on the downside by wages growth and the labour market? And that's the game we've all been playing the last 6 or 9 months. And that's really what happened in February, that the RBA had been surprised on the downside as inflation had fallen more than they expected. And consequently, they were in a position that they could cut, but they really had no confidence that they could keep going. Well, you can put all that to one side now and lock in a 25 basis point rate cut for the 20th of May. It would just be very hard for the Reserve Bank to justify holding rates when the world economy is looking materially weaker, not a disaster, but materially weaker, when the growth outlook for Australia is already, has been downgraded, and where, the household consumption outlook is turning out weaker than what they had previously expected, which was much stronger than many of us in the private sector had been expecting. So, it would be very hard for them to justify holding rates at the next meeting. So we think you can lock in that 25 basis point decline.
All right, so lock in 25 basis points for the 20th of May, but what about over the coming months as well? Are you expecting the Reserve Bank to move again with the cash rate towards the end of this year?
We haven't changed our base case that there are 2 further cuts after May, but that is going to be very much dependent on what happens in the world economy. We've had so much uncertainty coming out of the US, so many other seismic shifts like the pivot in Europe with the constitutional change in Germany to enable more defence spending. There are some really big seismic shifts going on in the global economy that Australia is going to be buffeted around by. So at the moment, we are still expecting 2 more cuts, but we think the risks have completely flipped. Previously, the RBA was so worried about inflation not getting all the way back to 2.5% versus the 2.7% they had in their forecasts in February. They were so worried about that they weren't willing to commit to cutting rates further at all. The risks were they were going to go slower than we had thought. But I think now with the global economy being as it is and all the turmoil that we're seeing in global markets, I think we can be reasonably confident that, at least 2 cuts are in the offing. And if we're wrong, it's more or maybe sooner. So the risks are now to the sort of the dovish side, whereas previously they'd been to the hawkish side.
Luci, Ellis, Chief Economist at Westpac. Thanks for coming on the show.
Thanks very much, Ed. Always great.